Good morning, business owners, entrepreneurs, freelancers, creators. If you've been pulling your hair out trying to get approved for a traditional mortgage, this video is for you. Today we're breaking down one of the best kept secrets in home financing, the bank statement loan. Powerful tool that could finally help you get the keys to your next home without having to play gymnastics with your tax returns, P&L, balance sheet, etc. By the end of this video, you'll know exactly how these loans work, how to qualify, and even why they might be better than a DSCR in some investment purchase situations. So let's get into it. So what is a bank statement mortgage loan? It's a type of home loan designed specifically for self-employed borrowers like you who don't have traditional W-2 income. Instead of requiring tax returns, lenders go off for your last 12 or 24 months of bank statements. That's it. So no need to dig up your Schedule C or every K-1 that you have. No long explanations about deductions, just cold hard deposits that show your cash flow. This works great for small business owners, freelancers, gig workers, consultants, creators, and even part-time entrepreneurs with a side hustle. Here's how it works step by step. Step one, we're going to be looking at your personal or business bank statements and decide which one's going to give you the best income. Or in some cases, we can actually use both. Step two, we total up your qualifying deposits. This means your income from clients or business activity, and transfers and gifts don't count in these totals. Step three, lenders average your total deposits either over the last 12 or 24 months to come up with an average income. Let's say you had $240,000 in qualifying deposits over the last 12 months. Obviously that works out to an average of $20,000 per month for your income. Now, if we're using your personal bank statements for the deposits, oftentimes we can use 100% of the deposits to qualify. But if we're using business bank statements, most lenders are going to apply what's called an expense ratio. It can be anywhere between 30 to 50%, depending on your industry. The expense ratio helps account for expenses in your business. Obviously, not all revenue is pure profit, so this is supposed to represent your expenses. Good news though, if you have a CPA that's willing to write a letter for you, oftentimes we can reduce your expense ratio if that'll help you qualify. Now here's why so many of our clients are choosing bank statement loans. There's no tax returns needed. Qualify for more income than traditional loans. You can keep your business deductions. You can access luxury properties, even up to $4 million and above. And lastly, you can use it for primary residences, vacation homes, or even rental properties. So I once had a client that tried to qualify with a traditional loan. Underwriting only gave him credit for less than $4,000 a month. When we ran it through a bank statement calculation, we gave him credit for over $40,000 per month in income. So it can be a pretty drastic difference between how much income you get on a traditional loan versus a bank statement loan. All right, let's talk about what you'll need. 12 to 24 months of bank statements, a credit score of 620 or higher, a down payment. You'll need at least 10% down, and to get better terms, a lot of times you'll have to do 15 or 20% down. We'll need to show consistent deposits from your business income. Now, these loans do come with slightly higher interest rates than a traditional mortgage, but oftentimes that trade-off is worth it for buyers, especially when you get to write off all your legal business expenses and qualify for more income. Now let's compare bank statement loans to another popular option for entrepreneurs and investors, the DSCR loan. DSCR stands for Debt Service Coverage Ratio loan. These loans are primarily used for investment properties, and they qualify you based on how much that property that you're buying is going to generate in rental income, not your personal income. DSCR loans are super useful when you're buying a rental that cash flows well. You don't want to provide income docs. You already own multiple properties. But here's when bank statements can be a better option for these investment properties. You're trying to maximize your buying power. Bank statement loans can often qualify you for a bigger property. Maybe you want to avoid prepayment penalties. A lot of DSCR loans already have prepayment penalties baked in. And not to get confusing, the bank statement loans on an investment property can also have a prepayment penalty, but it's less common from what I've seen. And last, when the rental income isn't enough to cover the mortgage payment on the property, so the ratio doesn't cover. This is very common to see in California. Unless you're putting a super large down payment, oftentimes the rental income is not going to be enough to cover and give you the best terms on a DSCR loan. However, if you're self-employed, maybe your personal income is enough to cover. So if your goal is flexibility, better rates in a lot of cases, and the ability to live in the home or buy a second home, bank statements oftentimes are better than DSCR. All right, so here's who bank statement loans are perfect for. A full-time entrepreneur that's been self-employed for at least 1 or 2 years, the 1099 contractor who takes heavy tax deductions. And there's actually separate 1099 programs that are similar to this. We can get into that maybe on another video, or if you want to set up a call with a side hustler or a content creator that wants to leverage their real income and not just what they're showing on paper. Lastly, the small business owner that wants to keep using write-offs without sacrificing their buying power. If you're ready to explore your options, the process is simple. Step 1, gather your bank statements. Step 2, we'll run the numbers and we'll have an underwriter come up with an exact income figure for you. Step 3, apply and get pre-approved with real numbers that you can shop with. I work with over 30 lenders offering these types of loans, and we know how to match you with the best program based on your business type, deposit patterns, and goals. Now, if you're anything like me, the type that maybe wants to do some research on this stuff on your own, I'm the same way. I like to do my research, and sleep on it, get back to you. In the video description, I'm gonna include a link for my free guide on entrepreneur loans and bank statement loans. It's something I put together. I spent days putting this together. It's not some crap that T just spit out in 5 minutes. So it's totally free. Just click the link in the video description and we'll send that over to you. Homeownership as a self-employed person is within reach, and you don't need to twist yourself in a pretzel to get there. So if you want to learn more, drop your questions in the comments or click on the link to book a quick Calendly call. I'm Andrew King. I'm your mortgage guy for self-made people. I've been doing this for a decade. I appreciate you, and we'll see you on the next video.